Hello, I'm James Turk. I'm the founder and chairman of Gold Money and the director of the Gold Money Foundation. It's my pleasure to be here today with Bill Murphy, a good friend of mine, and most importantly, the co-founder of Gold Antitrust Action Committee, or is more popularly known as GATA, GATA.org. Bill, it's really great to see you here in Munich, and I'm looking forward to participating with you this evening at the conference that's being sponsored by DEG, one of the big gold communities and gold organizations here in Munich. I wanted to talk to you a little bit about, first of all, what GATA is doing, the London conference, and then we'll get into this evening's presentation and perhaps a little bit about markets. So Bill, let's start with the conference that GATA is organizing in London in August. It's the fourth of GATA's conferences. Can you tell me a little bit about the background and your thinking surrounding that?
Yeah, we're pretty excited about it. GATA's had three conferences. This will be our fourth. Our first was in Durban in South Africa in May of 2001. Then we had our historic conference, Gold Rush 21, in August in the Yukon. Then in 2008, we had GATA Goes to Washington, right out in Virginia, right outside of Washington. And we're commemorating our Gold Rush 21 conference, which really was a phenomenal conference. 6 years later, almost to the day, at the Savoy Hotel in London. And we've got, here's a sample of the initial invitation and so on. And we hopefully to get a sellout crowd. And we got many of the same speakers we had at Gold Rush 21, plus a number of new ones, notably Jim Sinclair, who never speaks anyplace, who wants to speak at our conference. And we think it's going to be a seminal event.
When will it be held, and how can people get information about the conference?
It's going to be held in August, August 4th, 5th, and 6th. It's going to be a different kind of a conference, very casual. The speakers are going to be around all the time. There's going to be dinners and lunches together. And people can find out more about it by going to www.gata.org and register. And I hope if you have an interest and have the time that people look at it seriously, because it'll be an event, if you're interested in the gold and silver market, that you'll never forget.
Okay, so GATA.org, sign up for the London conference.
That's right.
Yeah, I'm going to be participating as well, and I'm really honored. I've had the great fortune of participating in the first three, and I'm looking forward to participating in the fourth one as well. And it seems like every time you have a conference, the gold price goes up. Are you expecting that for this one too?
It's going up so fast as is. Who knows what we'll be celebrating by then, but let's hope that's the case again. I know after Gold Rush 21, which was attended by a key economic assistant to President Putin of Russia, Andrei Bykov. He came to our conference out of nowhere, said it was the finest conference he's ever been to. Gold was trading about 436. It was dead in the water. 2 days later, it exploded and went up to $720 in the next 9 months. So if it happens like that again, we'll be very happy.
Okay, great. Let's talk a little bit about the conference here in Munich this evening that Gold Money Foundation and DEG are putting together. What is the message that you're going to be giving to the people participating in that conference?
Great point, because what I'm going to try to cover is the key to knowing what's really going on in the gold and silver markets is to know what GATA knows. And you can't find it really anywhere else because we're not allowed, our views aren't allowed to be presented, even though we've been righter as a group than anybody in the world the last decade about what gold and silver we're going to do and why. And basically, it's simple. The establishment, what I call Planet Wall Street, and the mainstream gold world are working on the wrong supply-demand numbers. And because they failed to take into account the gold price suppression scheme, which includes silver, and the ramifications of what was going to occur afterwards. And we've laid this out year after year after year, and it's why many of the people in the establishment world have not got this move at all and got it right. Many have been neutral to bearish all the way up, and I'm going to document the contrast tonight and say, look, you can believe or not what we have to say, but here's our track record. Here's their track record. What do we know that they didn't know? And here we are. And then to establish that the GATA camp knows what we're talking about, then where do we go from here? Because people will be attending the conference wanting to know, well, what do I do with my money from here on in? That's great that happened in the past. Good for you guys, but what does it mean to me now? So we're going to lay that out of what's coming and why, and hopefully from what they've heard through the presentation, they'll have enough confidence to be more aggressive. Especially, excuse me, if I might say, especially in the share sector, which is the total joke at the moment.
Yeah, the shares have been really beaten up and are tremendously undervalued relative to bullion itself. But what do you think is coming?
Well, at Gold Rush 21, with the price of gold at 436, you know, because you were there, James, pounding the table, that it would take $3,000 to $5,000 to clear the market. No reason to change that outlook. I know you're more bullish, which is even great. One of the things I want to say that you were there to support us. Now we're here to support your views, which I agree with. And as you well know, I mean, the GATA camp has been pounding the table since our CFTC appearance a year ago about silver. We exposed what was going on there in the market by some of the bullion banks. They're trapped short. I think you can pick a number for silver on the upside. We've been dead right in this thing, and now most of the other people are scratching their heads and trying to come up with the reasons why it's happening and so on. And we're going to lay that out tonight too, and that the opportunity still in gold and silver, and especially in the shares, which is a historic dichotomy the way I look at it for various reasons. I'll try to explain that. Well, I hope it'll be a very exciting conference with you and I making presentations.
Yeah, I'm sure it will be. You know, for the sake of disclosure for the people who are watching this, I happen to be one of the people who watched your first and only appearance on CNBC.
I didn't know that.
Which was probably about, what, 1999?
It was February 1999 with Ron and Sana.
It was funny because, you know, I was watching, and as I recall, it was a Friday afternoon too, probably very few people watching. And so I was watching TV and watched your presentation, and a couple days later I happened to be chatting to my friend Frank Venerosa and said, you know, I saw this brilliant guy on CNBC. I couldn't believe it. He's talking about the manipulation. Turns out that you and Frank were good friends, and he put you in touch, put me in touch with you, and you know, we've been in contact ever since. Any plans to appear on television anytime soon?
Well, we've been trying to do it ever since February 1999. Actually, since then, we've been blackballed ever since.
In the U.S., because you've actually appeared in television around the world, but not in the U.S.
Around the world, yes. But we've been blackballed because GATA, quite frankly, is taking on the richest and most powerful people in the world. And the establishment doesn't like that. Even though our track record is second to none of what's happened in gold and silver. So we've been trying, and we get in contact with TV people and media people, and nothing. The one potential bright spot, which maybe will be a breakthrough, is that my colleague Chris Powell is meeting with the Wall Street Journal next week, which is the first time in 12 years that they even want to know anything about what we have to say. And by the way, the irony is, we put a $264,000 ad in the Wall Street Journal in 2008, January 31st, before the crash. We said a catastrophe was coming. It's that the manipulation of the gold price is going to lead to disaster. These are quotes. We talked about $3,000 to $5,000 gold. It was less than $1,000 then. Nothing. No questions why we would spend so much money, how we could be so right. And in retrospect, it's just like a black hole, whatever we do. So maybe this conference will change things in London, or perhaps this conference here today, get together here in Germany. I don't know, but you'd think somebody would want to know what we know.
Yeah, that advertisement was very prescient and extremely well timed. But then again, all of the GATA work that's been coming out, for 10 years, over 10 years now, has been very prescient. And you've basically laid out, what was going to happen, what were the consequences of the price suppression scheme, and here we are. But still getting not that much attention, but probably I would say increasing attention, wouldn't you, in terms of publicity?
I don't know. I mean, it's great to be here, and I'm thrilled to be at this presentation tonight because the people that really a lot of smart people from Germany and Switzerland. We hope it will catch on, but honestly, we went to London 2 years ago. John Embry, who many of your people will know, and my colleague Chris Powell and I, and we met with all the right people, and they didn't even mention that we showed up. After the GATA presentation in front of the CFTC on March 25th of last year, we had this bombshell news with Andrew Maguire, emails, market manipulation stuff, and we had all the emails to hand out that was sent to the CFTC in advance. I mean, what a story. Reuters, Bloomberg, all there gave it to them. They didn't even mention our name. Not only that, my presentation was blacked out. It was the only one on the entire a day of presentations that the CFTC blacked out, and they said it was a technical glitch. Well, that's a bunch of bull.
Yeah, quite a coincidence.
What a coincidence. Yeah, it came back on as soon as mine was done. They fixed it.
Yeah. What is the specific objective that you intend to accomplish with the London conference? Is it just continuing to get the word out? I mean, it's already so well documented that the work that GATA has done over the past 10 or 12 years, that the price suppression scheme is real. Is it just more education, or is it more publicity? What's really the principal aim of it?
Well, it's a bunch of things. It's like a murder trial. I mean, the person who committed the murder is guilty beyond belief, but it takes the jury a couple of 2 or 3 months to lay out all the evidence that they're guilty, and then the jury comes back guilty beyond a reasonable doubt, penalty of death. But you have to go through all that to understand it. And the people in what I call Planet Wall Street, mainstream gold world, still attack us. Our stuff is really not accepted outside of a lot of smart people, quite frankly.
But they say that the price of gold isn't manipulated because the price has risen so much. What's your response to that?
Yeah, I can understand why the know-nothings would say that, but the price of gold, if it kept pace with inflation, would probably be $2,400, $2,500 an ounce. And anybody who understands, again, it's like that murder trial again, the nuance of this thing, knows that what the gold cartel has done is managing a retreat. And what we've been saying this, and of course what you know and I know, is that when it comes to silver, that their problem is they have run out, and they were exposed by GATA, our camp, at the CFTC hearing, that there's a massive short position out there that cannot be covered. And that's why the price is just starting to go up and up and up, because a lot of people, our stuff did go viral on the internet, and it got a lot of traction. But you still won't hear about it in a lot of so-called respectable circles. So we're going to this conference. One, we're going to celebrate Gold Rush 21, smell the roses along the way. Silver has gone from bananas, and gold has gone from 436 to 1536. Why not have some fun and celebrate what we all did with some good people and get to see each other again? But then it's not to rest on our laurels. It's to further expose what these people have done and the ramifications of what it's doing to economies around the world and the U.S. and so on. And then to let people know, as I hope to do tonight, of what we think is going to happen in the years ahead, and give them reasons why. So it's a combination of things, and as I said, I think it'll be a very special experience.
Okay, good. I'd like to sort of turn to the markets a little bit, but before I do that, I just want to give it a little bit of background information that people may not know, that you're an experienced commodity trader. And I always enjoy talking to you because I've got a lot of background in commodities as well. And even though we never met years ago, our paths crossed in a sense that we have a lot of mutual friends in the business. When I was living back in Greenwich, Connecticut, and I guess you were in the New York area, maybe you were even in Connecticut as well. I don't recall. When you were with Shearson, you were at Shearson, right?
I was at Shearson and then Drexel Burnham, and then had my own thing, and was a limited position trader at some point. And it's been invaluable for me that experience to understand what was going on in gold and silver. That's how I figured it out, because I've been there, done that, and I realized in 1998, after long-term capital management blew up, that certain bullion banks were all acting in concert to cap the price. And we had heard long-term capital management was short 400 tons of gold. This was before GATA, before my website even started in September of '98. And so when they all of a sudden went under, we knew that their position would have to be covered, or should be covered. But because so many of the bullion banks were doing a carry trade and borrowing cheap gold, for no money versus the high interest rates, and they were all short, they banded together and with the government, which was attacking the prices on the Fed and the Treasury, and made sure that the price did not go up above $300 and make their cheap loans all of a sudden really expensive. And of course, then in May, and as you remember very well, when the English with Gordon Brown decided to sell half their gold out of nowhere, advanced it ahead of time, that has added to the supply and kept their gold loans safe for another year or two.
So those events were really the catalyst that caused you and Chris Powell to get together and form GATA?
Well, the LTCM did, because I started complaining about it. I started writing Scandal Gold, and he came, he had antitrust experience with his newspaper. He said, I think you're right. Let's do something about it instead of just start talking about it. So we formed GATA, and then had our one-time experience on TV, and some people watch it like yourself, and got a little traction. But the Bank of England sale of gold, which was so obnoxious, I think was the one that brought many, many of our top people into it. They said, this is ridiculous, GATA is right. Nobody advertises a gold sale in advance if you want to maximize your money. And that was not the purpose of what Gordon Brown was doing. He was paving the way for his political career, gaining favor with the power and money in the United States that wanted the gold price where it was.
Yeah, I always make the case that Warren Buffett doesn't announce in advance when he's buying or selling a stock. So why would the Bank of England announce in advance that they're selling gold, if not to have a propaganda effect? But I mean, the so-called brown bottom, Gordon Brown's decision was actually the bottom of the market, and it's been gold's been higher ever since. Is it simply because gold was so undervalued at that level that it really couldn't go any lower, and the smart money started coming in and recognizing the undervaluation?
I think so. In addition, you did some work back when which helped GATA immensely about what the real gold loan situation was, and it started with my friend Frank Veneroso and so on. He wrote about it again before GATA was started, that they were much bigger than most people knew. And that, again, it had to do with Robert Rubin and a lot of these other people who was at Goldman Sachs at the time, and all these different gold loans that a lot of people were using, corporations, to finance their operations. So they were very, very large. And I know you did some work on this, and Reg Howe did some work on this, that the gold loans were much bigger back then. And what I'm trying to say is the central banks have gone through much more of their gold than people know. If the average person in the industry, or we'll say, well, what do the central banks real own of gold? And they'll just throw out 30,000 tons. Well, I won't speak for yourself, James, but I think it's more, they only have like 10 or 12,000 tons left. Years ago, we thought it was 15 and 16, and some of the hedgers have returned some of their gold. But the bottom line is the central banks don't have the gold they say they have. Frank Veneroso at our conference in Durban, with the price of gold at $256 an ounce, said the central banks, May 2001, will run out of gold. It's selling as a group in 7 to 10 years. And in exactly 8.5 years later, December of 2009, the European central banks stopped selling gold. So what I'm saying here is that it started going up. The banks don't have the gold they say they have anymore. They've gone through their silver. They're managing their retreat. And a lot of people back then, like yourself, saw what was happening and knew that those prices were unsustainable. Although I might say, once again, the establishment back then was telling the likes of Barrick Gold and Anglo Gold to do massive hedging operations right at the bottom, and they got killed. Stuff that they were hedging at $300 and $400 and $500 have now been covered at $1,000 and $1,300 respectively. It was a disaster, and that's part of the thing I'm going to present tonight. Look, this is what we had to say back then. What do we know? This is what they had to say, and look what happened.
Yeah, back in as you may recall, at the Dawson City Conference, I was making the point about the deception in central bank accounting, that they show gold in the vault and gold out in loan as one line item. So you couldn't really determine how much gold they really had in their vault and how much gold was put at risk by lending it to a bullion bank or whoever. And the gold loans were a big issue back then. I don't think the gold loans are as big an issue today. And let me get your thoughts on this in the sense that what's happened over the past several years. People have become so concerned about all of the other issues out there, and there's so much paper relative to the amount of gold that central banks have. The rush out of paper into gold seems to be underway, and that the gold loan is no longer the big factor.
That's pretty much true. But again, it strikes me that the reasons that gold and silver are doing what they're doing, you've been pounding the table on for years, and quite frankly, we have on our side of the GATA camp, and now all of a sudden it's like people are surprised. What's the big surprise? It was so obvious some time ago. So when it comes to the gold loans, I think part of it's because you're right, there's so many other things to get into, and actually it's already happened. That was the story back then. We knew what was going to happen and why, and now it's already happened, so there's other things to move on to. But still, it's going to be very interesting to, and I want to try to explain, well, why can the price of gold still go way, way, way up from here? The central banks, and it's important, they don't have the gold that people think they have. So they can't all of a sudden say, oh, the price is high, we're going to sell all this gold. No, you don't have it.
Yeah, but even if they try to sell it or propaganda, put up propaganda that they're going to sell it to try to depress the gold price. They've gone to the well too many times with that story, with that propaganda. I mean, look at the IMF example. How many times did Gordon Brown and others say that they're going to get the IMF to sell their gold. The IMF finally sold 400 tons and it got snapped up just like that. Because the market is starting to sense that there's a lot more paper out there relative to gold. So they're sort of losing their propaganda power that they once had. Isn't that an indication that this market is changed fundamentally? It's
changed fundamentally for many, many reasons. One of the reasons now that you saw coming way ahead of everyone else and advised people properly to buy gold at 300 and 400 and 500, 600 are now becoming so obvious and pronounced, and they're actualized, they're happening at 1,500. People see what's coming, and it's not good, you know, with the inflation numbers in the United States, stagflation. But most importantly, I think, or just as importantly, is what's happening outside of the Western world. I mean, with the Chinese, the Russians. The Russians know all about GATA. The Chinese know all about what GATA has to say. I've been on 3 conference calls. You were on some conference calls yourself with the Chinese investment corporations. They know what we know. And of course, the Chinese is an open story. They're encouraging all their people to buy gold and silver, whereas in the United States, the word gold and silver are never mentioned unless they have to be.
Yeah, outside the Western world, the view of gold is entirely different than within the West. You know, most of the world actually recognizes the reality that gold is money. It's only, you know, within the Western environment, you know, those influenced by Keynes and others, you know, that gold doesn't have a role to play as money, which is completely absurd to by far the vast majority of the population of the world.
Well, I was laughing today. I saw a French commentator on CNBC Europe real early this morning, and the guy was talking about the Bernanke comments and the Fed comments and what they had to say recently about what the Fed was going to do. And the guy was so blunt, he said, it was a joke. He says, they're talking about a strong dollar. And they said, well, what do you mean a strong dollar? Timothy Geithner, the U.S. Treasury Secretary, recently was talking about, I mean, it's like, talk about feeble words. And when they can talk so blatantly like that in Europe, that, you know, the Bernanke, our U.S. comments, it's really a joke. We're doing nothing about our problems. They're getting worse and worse and worse. I think it was the other day they were making a big deal out of a $35 billion deficit and a new budget, whatever they were doing. And in the 4 days during which they were talking about it, it went up another $38 billion.
Yeah.
It's just out of control, and we're not dealing with it in the U.S.
Yeah, that's key. It is out of control. I think that's one of the reasons why I've been talking about a waterfall decline in the dollar. I've been doing this on King World News as well as other places. And the other day I did a blog with Eric King saying that, you know, the waterfall decline begins now. I was using the Bernanke press conference as the turning point and saying that years from now we'll look back to 2011 and say this is the year that the waterfall decline in the dollar began. And before coming down here this morning and doing this discussion, I checked prices, and the dollar index is under 73. Closing in on its all-time low in the 71 area. Do you expect that low to be taken out soon?
I would think so. I think that's what the markets are telling us. And I think it's going to be, you know, quite extraordinary, because, you know, when those events happen, they can feed on themselves, and it can get quite dramatic. And I don't think I know in America, people don't realize the ramifications in terms of inflation and standard of living, and but it's clear. I mean, the United States, our inflation levels are picking up everywhere you look, and yet they're making sure that interest rates stay exactly where they are, right above zero, and long-term rates, the Treasury rates stay below the yield on the 10-year note below 3.5%. And it's artificially creating all this situation where money's going to go into real things, and especially gold and silver.
Yeah, that's why I use the term waterfall decline, because it's something that can really gather momentum when confidence breaks, and I think that's what's happening. You also raise a good point about, you know, people are sort of asleep at the switch within the U.S. You know, when a currency collapses, the recognition that a currency is about to collapse comes first from outside of the country. You know, people who are holding dollars outside of the country recognize it first, and they start getting rid of their dollars, so you see the dollar decline on foreign exchange markets. But within the country, you know, because people are getting their salaries and being paid in dollars, and they're using dollars at the grocery store or at the gas station, you know, they're a little bit slower to understand what's actually happening to the currency. But, you know, given what's going on in gold and given what's going on in silver, it suggests to me that we really are sort of near a collapse of the currency, and that gold and silver could rocket higher. Are you planning to put the GATA rockets on your website anytime soon?
Every time I put up the GATA rockets and the GATA sign, I get grief because it's usually a top when I get that excited. So I've been banned from putting them up but I might just have to do something. At least then it can alert maybe our people that maybe they should take some profits.
I mean, given that silver's up 150% over the past year, as a commodity trader, what would you normally think? This is obviously, a very rare event.
It's a rare event.
Yeah.
And I think, I just wrote the other day that it may be unprecedented in market history because, as I mentioned, the silver market is extremely overbought technically and still extremely oversold fundamentally. Mm-hmm. Some of the shorts don't have they've been found out. They mm-hmm. don't have the physical silver, and the big money, the smart money, knows it, and they're going after them. Mm-hmm. And I think it could be something that no one's ever seen before, and it's going to be spectacular. Yes, we're at lofty levels, and we're close to that magic 50 number, and there's only been two higher silver fixes, two or three in history that back when silver made the move in 1980 under the Hunts. Once you take that number out, who's to say? And if the dollar's collapsing at the same time and the shorts don't have the silver, what are they going to do? And of course, God has exposed this thing. And people say, well, there's going to be default or force majeure, and the exchange is going to let the big shorts out. Well, wait a second here. The CFTC has been told by these major shorts that they're hedged. Oh, what do you mean? Well, if you're hedged, deliver.
Yeah.
Because of the size of their massive short positions. Then there's been a CFTC investigation for 2.5 years. Well, all of a sudden this is what the GATA camp and people like Ted Butler have been screaming about and saying foul, foul, foul. How can you then have that happen if you did nothing? And then there's the 25 lawsuits against some of the major shorts. It's going to be a stink beyond belief. And maybe that'll get GATA some attention to focus on give us the attention so we can focus on these issues and how this could have happened, because there's some people that should pay for this, big time.
Will it be a government bailout of the shorts?
It's interesting because in some markets, maybe you could get bailed out, but the government doesn't have the silver either.
No, they don't have the silver, but they have the printing press.
They have the printing press, and what
if
price?
you're short silver and you have a printing press and you can deliver, create as many dollars as you want, do you really care if you're short?
Well, the question is, at what price? I mean, at 50 is one thing. At 100, 150, we're going to talk. They say there's some serious money is going to start mounting on the short now.
But the dollar, by the same token, is going to continue declining.
Well, here and if in fact, because this is where GATA would come from, if you put that money along with the paying interest on their treasury notes and so on, and the value of real estate by doing what they can by keeping interest rates low, the stock markets. The dollar, or doing whatever they can, the money lost in silver, no matter what it is still to trifle. But it's still going to be some pretty big money.
Yeah. One of the premises that I've been working on lately is that, given what you say is an unprecedented event here with silver, is that, and silver continues to be in backwardation, which is now unprecedented as well since January of this year. Here we are in May, coming up right around the corner, that the spot to December 2015 contracts remain in backwardation. Even though the price of silver has risen from $27 or $26 when that backwardation started in January to where we are today, in the high 40s. Normally the higher price causes people to sell, entices them to get rid of their silver and to actually take dollars and hold the dollars instead. But instead, this time around, the higher prices actually increased the demand for silver and really hasn't produced a lot of supply. So, we've got a very unusual circumstance. And the question I'm sort of leading to is this premise that I've been working on, is that the futures contracts, or the paper market more generally, is starting to lose its importance as a price discovery mechanism, and more people are going to be looking just to the physical market itself. And I say this for a couple of reasons. Aside from the backwardation, you look at some of the funds, for example, Sprott's physical silver, PSLV, which trades at a huge premium to the actual reported spot price of gold. In a way, that's sort of indicating that there's a backwardation there too, because everybody knows that PSLV actually has the physical silver sitting there in the vault. So, again, given your 30 plus years of experience in commodity trading, do you think it's plausible that the paper market could lose its importance as a price discovery mechanism?
Well, I think especially it's happening in silver because the price of gold has gone so high. A lot of people can't afford it, an ounce of silver, gold, but they can afford silver at these prices. And because of the West, especially, is so momentum oriented, all of a sudden it's becoming fashionable that to own gold, and we're talking about silver. So somebody the other day, somebody was saying that that they went in to sell a little bit of their silver, and there was lines at the coin shop, and he thought it was people going to be selling their silver. They were buying. And I think it's very encouraging from our standpoint because it's making the life of the gold cartel and the people on the short side, it's ruining it. It's killing them. They're deep underwater. As you well know, they raid the market. They tried tricks by raising margin. They attack at certain times. It's not working. In the old days, years ago, they would make a move like this. It would be many, many months before the price could recover because there was so much technical damage in terms of the market. Now, because of the physical market, what you're talking about, and that's where I would say that's where the importance is, you get these dips. Boom. People are now flocking in on every dip. So their games don't work like they used to, and that's why we could have something that's never been seen before in a market in America.
A collapse of the dollar?
Well, I think that's too, but the silver going bananas. It just bid. As the shorts, at some point, they have to cover some of them. Maybe not the ones being bailed out by the government, but if you're short silver, just the other day, I put in my commentary, James McShirley, one of our sharp, he was talking about Carlos Slim putting on hedges a long time ago.
Yeah,
he's getting
$27.
This richest guy in the world. Well, he's not going to be the richest guy in the world if this keeps going on.
Yeah, exactly. Just looking at gold and silver, a lot of people are a little bit concerned that because the price is high that gold and silver are in a bubble. And I always like to make the point it's not the price of gold or silver, but really the value of gold or silver. And I look at value two ways. First, historically, is the price cheap? And if you allow for the debasement of the dollar over the period of time in which you're analyzing it, even since we were in Dawson City, look at all of the dollars that have been created since we were meeting in Dawson City. That's debasing the value of the dollar. So the rise in the price of gold and silver to a large extent is just because of dollar debasement. But the other thing, of course, the usefulness comes from, well, what do I get if I own gold or silver today? And what you get is the fact that you own a tangible asset that's historically always been money, and there's no counterparty risk, which is increasingly important when you're in a financial bust like we've been in the past few years. When you have no counterparty risk, you own a tangible asset. The value of that asset is in the asset itself. It's not based on someone's promise. Do you think, as a consequence, what you were saying about the silver story, the friend of yours who was selling silver and all these people were buying, are people starting to catch on that gold and silver still are undervalued, that they're still useful? And maybe it's because they go to the gas station and they see prices approaching $5 a gallon, or other factors. Is that what's really driving the market here?
Well, again, the West loves headlines, and they like momentum, and I like things that are working versus doing their homework and like you did so many years ago and saying, look, here's what's going to happen and why. But now it's caught their attention. So when gold hit 1,000, they didn't really respond to it. I'm talking about gold, they didn't respond so much. 1,100, 1,200, 1,300, now it's at 1,500, and now going north of 1,500. All of a sudden, everyone's going, uh-oh, and they know what the inflation story is because of the gasoline prices and many other things. McDonald's talking about it for the very average person. Walmart. It's starting to be everywhere in the United States, and people are becoming concerned about keeping what they have as much as they are making money. Fear is taking over greed in some way, in the sense that they want to protect what they have. And with silver making headlines on a daily basis, it's getting their attention that they're missing out because they see the price keeps going up, and people are talking about, well, it's too high and the correction, this and that. Well, cheapers, when you can go from 16, when GATA did his testimony in front of the CFTC, to almost $50, while we're sitting here, $48, $49 an ounce, you go, my God, what's going on? Something's happening that's changed. And they're such tiny markets, as you well know, and the masses aren't there. I mean,
not yet. They're just starting on the edges to start coming into it.
That's my point. They're just starting. Well, what's going to happen when the herds come in? When, you know, someone made a comment the other day that the gold and silver investments in the United States are like 1%. That's all people have invested, 1%, and it's way below the norm when things really get going. And that's up from 0.2%. And Eric Sprott alerted me to something. He said that, you know, that reason it went from 0.2% to 1% is not because there was a lot of new buyers. It's just that the value of gold and silver went up so much it made it up to 1% in portfolios. So all that buying is still to come in, and that's why you know, the prices of gold and silver are going much, much higher, and people that own it will be able to sleep at night.
Yeah, one of the stories I like to tell about you know, silver particularly, but it also relates to gold. You know, when people ask me whether or not, you know, they should be buying gold or silver, I basically say, you know, does it have usefulness to you, and you know, what can you do with it? Well, I remember as a kid growing up in the 1950s that my parents could go into the gas station and with $2 silver fill up the family car. And today, with $2 silver, you can still do that, but only when you look at silver at the face value of the silver itself, not, you know, with the dollar amount on the coin. So, you know, it's a good example that silver does have usefulness because it preserves purchasing power over long periods of time. And that to a large extent, this rise in the price of silver is really just a decline in the purchasing power of the dollar. And maybe we're going to see more and more people moving into the precious metals, you know, for that simple reason that you alluded to, you know, the fear factor that people want to preserve what they have. They don't want to lose it to, you know, rampant inflation. On this issue of inflation, what's your expectations here? We all know that the government inflation number terribly understates the true rate of inflation. And I think, you know, they're losing a lot of credibility for that reason with the population at large. What's your own expectation here for inflationary pressures going forward?
I think, you know, we're in trouble. I mean, there's no way out. I mean, the inflation is, again, as I just mentioned, is rampant already. And the response by our Fed is that they're going to keep interest rates right above zero and Treasury rates down and make it almost an artificial situation. So the money's going to flow into goods and real things, and it's feeding on itself. And with the dollar, as you're predicting, and I agree with totally, it could go into a free fall because people are saying, you know, the dollar was the bastion of stability, which is part of the reason for the manipulation of the gold price by what I've always called this gold cartel. Yeah. But it's all falling apart. And it's like, what's it? It's the mirror thing. There's nothing behind the mirrors, you know, Alice in Wonderland sort of thing, you know. I mean, it's just, there's nothing there and nothing's being done about it. And what's going to have to happen is understanding that Americans just can't afford what we've been told we were entitled to all these decades. We're broke. And if we're just going to keep kidding ourselves and printing money, keeping interest rates down, and, you know, the bankers love it, the Wall Street loves it, the politicians love it, but as we get broker and broker and broker, we're probably looking at another flash crash, except that'll be real, out of nowhere. Things are just going to tank. At some point, a collapsing dollar and soaring inflation is not good for our markets, as is already the real estate market with all that's been done is a total disaster. And even now, the jobless claim, the employment situation in the United States, instead of showing signs of improving, is starting to tank again. This is after, you know, all this quantitative easing and stimulative measures. The standard of living, I'm afraid, I hate to say this, is just going to fall apart in the U.S. And people, there's going to be riots. I mean, not maybe major ones, but people are going to be so upset about it because the average person doesn't have time to think about these things like you and I do. Yeah. And they you know, they got kids and they got a job and, you know, they got to do all this stuff and they go home and they listen to what someone else says, and all of a sudden, you know, diapers go from $1 to $2 and things like this, and it's just feeding on itself.
Yeah, I agree, and it is sad if people aren't going to be prepared for what's coming. The best way, obviously, to prepare is owning gold and silver. But, you know, just sort of to summarize, you know, it's always been my view that one of the reasons why the gold cartel exists is to maintain the illusion that the dollar is really worthy of being is worthy of being the world's reserve currency, when in fact we all know that it's not, you know, because of the way the dollar has been debased. And I always like to go back to something that John Brimlow discovered years ago in Paul Volcker's memoirs that were published in Japan, of all places, that one of the mistakes they made in the 1970s, they being the Federal Reserve and the Treasury Department, was not to intervene in the gold market to keep the price of gold from rising, because it shook investor confidence. And he basically said, don't make that mistake again. And that seemed to be sort of the logic as to why when the dollar started getting overvalued and gold was undervalued, back in the 1990s, the intervention, became got started, I should say. Do you believe that that's basically a premise for the existence of the gold cartel?
Oh, totally. It's funny you bring that up, because it's one of the things I'm going to bring up tonight at our get-together. And it started with, again, these gold loans that Robert Rubin, the CEO of a major company, and everyone started to follow him. Then he became Treasury Secretary, and he was the one made famous always talking about the strong dollar, his strong dollar policy. Well, I went years, for the first years, and God was going around and say, well, okay, Robert Rubin's talking about his strong dollar policy. Okay, what is he doing to implement a policy? You have to have a policy, you've got to be doing something. I said, okay, would people tell me, raise your hands, what's the United States doing to affect the strong dollar policy? I never had one hand raised, I had to raise my hand. They're rigging the gold price.
Yeah, instead of raising the interest rates like Paul Volcker did.
That's right, and as we know where that came from, this is not just poppycock. Lawrence Summers, when he was at Harvard, he wrote a paper called Gibson's Paradox and the Gold Standard, was saying if you can control the gold price, you'll help control interest rates, that there was a direct relationship. And of course, who follows Robert Rubin into Treasury Secretary? Lawrence Summers, and he's been around with his behavioral finance operations behind even President Obama for years. So yes, it was the manipulation of the gold price was a big part of the strong dollar policy. They kept it going. The problem is now it's all falling apart because they don't have the gold.
Yeah. Well, I'm looking forward to tonight's presentation. Just to summarize, can you tell everybody who's viewing these videos a little bit about how they can learn more about GATA and what they can do to help GATA and its efforts?
Well, you go to www.gata.org, and you can sign up. My colleague Chris Powell does a lot of work sending out emails and does some great commentary. And I have a financial website, La Metropole Cafe, which people can sign up for a 2-week free trial. It's been going on for about 12 and a half years now, and it's worked out pretty well, and people can determine if that's of value to them. And it's going to be a lot of excitement, a lot of fun, and I think even most importantly, you get an awareness of what's really going on in the world. I mean, I'm not that smart a guy, but I laugh at when I look at CNBC or all these smart people, and I call them the Muppets. I mean, they're just like, they're talking about stuff that just isn't real or honest, or it's just like in a different world. I call Planet Wall Street. But they don't understand, they won't talk about all the things you can get from our perspective, which whether people agree with or not, we have been right, at least about gold and silver, and dead on, and very few people have our track record because we understand these things. And if you just read the average media, you won't get it. So, taking a look, if you don't know anything about us, what we have to say, and I think you'll enjoy what you read.
Yeah, I very much like Le Metropole Cafe. I read it every day. I don't know how you manage to do a commentary like that every day, but I've been reading it for years and years. I probably since we first started speaking after your appearance on CNBC, which I think is probably about the time you first got Le Metropole Cafe up and running.
It wasn't long after.
Yeah, well, Bill, it's been a real pleasure, and look forward to seeing you this evening.
Thank you, James.
Good, thanks.